right, very good morning to you. Welcome back to Daybreak. Today, it's normally all about health and nutrition. We're focusing today on financial health. And we want to help you because, you know, when you look at, I'm sure on your phone, you probably have a mobile lending app. And you've been told so many things about it. There's so many notions all over, especially if you are a mama mboga or just getting out there and trying to make ends meet, or you're an SME startup, or just somebody trying to make it through the day. You want to access money and you don't want to get into a debt cycle. Today, I want to unpack some of these and much more, including the new Financial Act, things that will help you out. And to do that, we have a lovely lady here who will allow to introduce herself.
Well, thank you so much. My name is AnnStella Mumbi. I'm the Senior Country Growth Manager at Tala. Yeah.
So let's start there. When people hear about lending apps, the first thing they're afraid of is, I'm afraid I'll borrow. Yes, it could be an emergency. It could be for something. It could be just because I want to grow my credit. But what if I get into a debt cycle? So what do people do so that they don't get there?
Yeah, before I even answer that,
yes,
that's actually a real thing, right? I think from our research, we actually know that majority of consumers today have more than one loan from different digital lenders.
Okay.
So it is a real thing, and a lot of Kenyans have actually gotten trapped in debt cycles,
yeah,
and a lot of over indebtedness in the market. So for us as a company, how we think about it is, before we give you a loan, do we actually believe that you have the capability, the capacity to repay that loan? So that is key, and is even part of how we underwrite, which is technically how we decide or score you to give you a loan.
Right.
But also for you as a consumer, I think the most important thing to ask yourself is, as I'm taking this loan, how do I plan to repay it? Because we understand from feedback from users is, you know, if I'm deep in the crunch and I have an emergency, at that moment my thinking is, I just want that money.
To sort this out now.
Yes,
yeah.
But it's not, you know, you need to also think through, do I even have the capacity to repay it? And also find a lender who understands you, because if you're not able to repay, then what happens?
Right.
I think that becomes very core in that, you know, you want to have the flexibility around how to repay, and you want a lender who can have a conversation with you in case you're unable to repay.
Right.
Yep.
And so what happens, because the other thing is, I don't know if it's normally borrowing or stealing from, well, let's use borrowing from Peter to pay Paul. Like you said, many people have different apps, so they could be taking from this app to pay this app. So how about, and you've talked about, you've done some research as well, how does one kind of curb that so that they don't get into that kind of, you know, cycle?
Yeah, no, there are different things, and
right,
dependent on your amount of income, one of the things that we always tell our customers is to save. Cushion yourself for emergencies. I think that limits how much you might need to borrow to meet an emergency, because emergencies will happen. Or if it's for your business, then, you know, how are you pre-planning for any, you know, emergencies or risks or minimized cash flow that might happen? So just being very, very, you know, being a good planner, I think, is a key thing there.
Right.
And another key thing is budgeting. So, you know, how do you think about, you know, how you want to split your money for your different expenses so that you're not caught unawares? And, you know, one thing I'd say is, for anyone who's a Tala customer, just look within the Tala app. The middle button is a Learn Center. So within that Learn Center, there are different articles and courses just around how to save, how to budget, how to plan. And you can always call us. We actually have free financial coaches who just help you think through your personal finance.
Right, right.
Yep.
And then, of course, the other big question that, you know, get asked a lot is, so you say that there is a way you score before you say, okay, you qualify to get this. What is that process?
Yeah, so from the minute you download the app, you'll be required to complete a loan application. So when you complete that loan application, for us, we're able to predict your ability to repay and sort of the status you're in. We also do ask to access some data off of your phone, but for us, that is mostly, you know, with the understanding that you own your data. So you have to actually give us express consent to be able to utilize that data, and that is not, you know, data similar to other issues that we've seen in the market. It's mostly just your SMS for us to be able to understand what type of transactions you've been doing and be able to understand, okay, Willis, we can give Willis this amount. Mumbi needs a different amount, because for us, it's all about what we call risk-based pricing. So everyone gets a personalized loan or a personalized offer depending on, you know, their ability to repay. Yep.
And so the other thing that, you know, is in this lovely country of ours, most of the conversations around borrowing, you know, right from the top, you hear China and all this, then there's bank loans and everything. You released a report in March, and from that, maybe you can kind of unpack it for us. What are some of the like the pain points you see for MSMEs, SMEs, and also, again, back to borrowing, what are some of the borrowing trends that exist?
Yeah, I think the biggest pain point at the time we were doing this was just economic pressure.
Which kind of still exists.
Right.
Yes.
But that was at least coming from a different problem altogether, which is COVID.
Okay.
So you find a lot of MSMEs who are actually just coming out of the COVID crunch. And the other thing is just always being access to financing. So you find that a lot of MSMEs, just by virtue of how they're structured, it's much harder to find data to be able to underwrite them. So the example I usually give is, if you want to go into a bank today and get a loan, you have to show up with your payslips,
yes,
AOS statements,
yes,
etc. So think of someone who does not have that formal financial history. How do you decide how to underwrite them or how to give them credit or score them? So that's what is innovative about digital lenders, where we're saying that, hey, we know Willis has been using M-Pesa, so we can use his M-Pesa statements to determine, you know, their feasibility. You're a business, people have been paying you to your Pochi la Biashara or to your till number. How can you use that data to prove your credit worthiness in that sense? So it still remains to be a big opportunity in the market across the board, which is just access to financing. So coming back to the trends, what we found interesting is almost 60% of consumers at that point were saying that they had started borrowing more over the last 6 months. And I think it was about 75% were saying that they intended to start borrowing more, or rather to continue borrowing over the next 6 months. So that, you know, of course, as we're getting that feedback, the inflation was not at the levels that it is at right now, at almost 8%. And what we anticipate and the trend we think we'll continue to see is just increased borrowing, because now MSMEs have to think about, how do I meet the increased cost of my inventory?
Right.
You know, I was buying my inventory at this amount, it's now X% higher. So how do I close that gap? The other question is, with increased inflation, it sometimes results in decreased spending. So that's a direct impact to cash flows within the business. So how do I keep things moving, you know, even in this economic downturn?
So even as people are doing this, again, just take you back to one of the points you mentioned earlier, talking about how most of the people, like you say, the mamambogas, etc., they may not have the payslip, yes, but they have the statements. So if the majority of people who are coming through are, maybe let's call it small business owners, how are you coping with that as a company?
For us, to be honest, it's always been about flexibility, because one thing that we understood is, to build products, you have to build them for consumers. So you have to put the customer in the middle. So if we're thinking about the mama mboga you've talked about, what's most important to them? You want to be able to develop products or credit products that are flexible for them and give them the power of choice and control. What I mean by that is, I should be able to decide when I'm able to repay.
Right.
I should be able to decide, you know, based on when I'm able to repay, how much interest I'm willing to pay. So just giving all these options, that a customer is not locked into one due date. It's more of pay at day 30, yet they're not salaried. What if they just need a loan for 3 days or 15 days and want to pay less interest? So let's allow for that, because that becomes core to just ensure people are not over-indebted, and they have the, you know, the products that actually solve problems for them.
Right.
Yep.
When you mention that, I think about repayment. So yes, I'll say I'll pay in 3 days, I'll pay in 30, I'll pay in 15. What if I don't? How are digital lenders, you know, enforcing some of those things? Because, beg your pardon, of course, people are, for some reason, afraid of banks. They're like, there's this, oh my God, I'm getting in trouble.
Yeah.
But people are like, I'll change my SIM card, or I'll do this. How is it on your side? How are you cushioned? What is your security?
Well, I can't speak to all digital lenders because there are over 300 of them right now. But specifically for Tala, let me start from a place of the consumer. So what happens if you're unable to repay? For us, first, we'll always remind you when it's closer to your due date, because you find that customers tend to forget because people have a lot on their minds and in their lives. So we'll always remind you, and we always allow for partial payment. So it could be that you'd say, I'm paying on the 31st. For real, it's gotten to the 31st, you don't have the funds, then you can always contact us and we'll figure out a payment plan with you, which is quite interesting and something that I think is very unique to Tala, where we'll create a payment plan for you and allow you to, repay over a certain period of time. In addition to that, for the period where you, the date you're supposed to repay, we actually offer a grace period, from which, if, for example, you were supposed to pay on the 31st, you have a grace period of a number of days to actually be able to stick to your commitment, in which, between that period, we don't charge you a late fee. But after that period, we charge you a one-time late fee of about 8%. And after that, it's, no other fees will ever be charged on that loan. And we actively work with you to just figure out how you can be able to repay us and actually maintain a good standing with us. To your point around us as a company, we don't really ask for collateral security because our mission and why we were founded, if you look at our founder, called Shivani Siroya, was actually working for the UN. So that's one thing people don't know about Tala. So we're a very mission-driven company, despite being sort of a for-profit company at the same time. So for us, our mission is how do we increase or democratize access to credit for the underserved, for the let's call them even the underbanked. So people who cannot really walk into a bank today and get a loan. So adding, barriers such as security and collateral, it just increases, the gates to be able to access credit. And for us, our goal is how can we find other forms of data to be able to determine that, this person, just because they cannot walk into a bank does not mean that they're not a good borrower. Majority of Kenyans are really good, borrowers, and that's how we've been able to operate for 8 years in Kenya. Yep.
And when you think about that, of course, I'm just realizing that this thing is based a lot on trust. But anyway, so there's some new regulations as well that are coming in. So again, the small business owners, the underserved, underbanked are thinking to themselves, all right, so now we have this new issues when it comes to digital tax is coming in. When I buy a phone, it is taxed. Now you're telling me again, if I'm going to borrow, then there's a tax that's being introduced there. How is it going to, or how is it already affecting?
Yeah, to be honest, this has been something we've been dealing with for the last month or so. At least from Atala's standpoint, for us, our goal is to always be compliant with any new regulation, just ensure our business operations are not interrupted in any way. On the other hand, we are always working with policymakers and regulators to just figure out how can we design regulations and laws that do not actually stifle the consumer who needs it the most. We do share in that concern right now because we believe that, this imposition of an excise tax, and especially one that was not, taken through the proper public participation process, is not, the right thing we should be doing at this point, especially taking the rising inflation, just, how unpredictable the economy has been. But, our goal as a company is how do we prioritize just being able to continuously offer affordable credit. And the only ways we can do that, because we really can't control a lot of what is happening on the government side, on our end is, design products that just continue to allow for flexibility so that we are making sure, consumers have the opportunity to get loans at a much lower cost than what is available to them right now. Yep.
So then when another question that I've actually seen somebody on social media is asking is saying, so for example, and this it reminds me of, you mentioned it, but it reminds me of when you realize that you've taken a loan and you're unable to pay. Like I remember when people say, for example, if you're salaried and you took a loan and you are unable to pay it, you can actually go into, and you get fired rather, you can actually go into the bank. Listen, I've just gotten fired. I need some sort of grace period to do this. So how does that work with digital lending? If I'm unable to pay. You know the classic Kenyan, kuna pesa nangojea. Kuna pesa, wacha pesa ingie fulani and then pesa isikuje. Pesa inakam. So how does that work when it comes to digital lending?
No, that's actually something very unique that I think I was talking about earlier that
yes.
we do at Tala. So for us is, I mentioned that you'll always be contacted, especially after your repayment date. And when our agents are talking to you, what they actually do is negotiate with you. They'll just ask you, hey, it sounds like, you know, you're expecting this business payment, it's been delayed, or especially during COVID, a lot of people were losing their jobs. For us, it's more of, let's agree, how much can you be able to pay us? Let's assume you have a 5K loan. Can you give us 1,000 each month for the next 5 months? And that way, you remain in good books with us because you're showing good faith. And on your end, we are lessening that burden, that pressure, because to be honest, Kenyans are having a hard time. Yeah, it's no joke. So we really understand that. And for us, we're not just interested in, you know, will you pay us now? We just want to build a longer term relationship with you, because for us, we see ourselves as a full service financial provider. So we just want to be with you in that journey across the board. Yeah.
And talk about that. That also goes back to like people having to actually know that information, having to know that you can actually do some of these things. And from your view, what is the status? Because also we talk about financial literacy first, just among borrowers generally, even based on the report, and then now going now deeper into now SMEs. Like what is? Are we financially literate? Are we going to look for this information, or is just, you know, we're just shooting from the hip?
Yeah, no, I think it remains to be a big problem across the board, especially for borrowers more generally. And one thing that I always say is financial literacy looks different now than it did some years back. I think a couple of years back, financial literacy was, you know, this is how you budget, this is how you save, etc. Right now, with the increase in digital channels, then it's how do you even use it?
Right.
You know, how do you borrow responsibly when you have, you know, multiple credit options? How do you save? Because then now you can save on your phone. How do you determine which is the best place to save based on the perks you're getting or the yield or interest you're getting? So now financial literacy has really evolved. And the issue is majority of people don't have access to that information. And it becomes a factor of two things, which is, of course, I've mentioned access. And access is just purely, how do I know who I can trust to get this information from? And the other thing is cost. Because you find for majority of people, they can actually not meet the cost to be able to, you know, access some of these, you know, some of these training material. So yeah, it becomes like a big problem. And for us, one key lesson that we learned, at least with regards to MSMEs, was through our Jijenge na Tala initiative. So for the Jijenge na Tala initiative, you know, we were actually giving non-refundable grants and free business skills training to businesses. And what we found was, you know, majority of them actually had never gone through any type of business skills training, yet they had been running businesses for, you know, well over 3-5 years. And, you know, a key interesting thing for us was we saw about 34% of them actually reporting income growth after going through that program. So as a test, that was a big learning for us around just the importance of business skills training and how much impact it can actually have for businesses.
All right, so I'm trying to see. I saw some people who are asking me some questions here, but then let's go back to still the report that you released and just the borrowing culture. Classically, people are told that most Kenyans, ikifika pale 15th, ndio watu wanaborrow. I don't know what the statistics look like in terms of Kenya's borrowing culture, in terms of the underserved, the mama mbogas.
Yes. Yeah, I think it's interesting. We do see definitely a spike slightly in the middle of the month. It does make sense. I think towards the end of the month, people have probably gotten their salaries, at least for the salaried groups, and there's increased spending across the board, which translates to also businesses because it means more cash flow for them. But as things get tighter within the month, we do see spikes there. I think another good example is in January as well.
Yes.
A lot of increased spending in December, and we do see you know, increased borrowing in January as people are trying to meet their different expenses. But what is more interesting for us is, and we came out of that Tala Money Match report was actually 78% of people who borrow from Tala are borrowing for business reasons. And this is across the board because it's not just MSMEs, but everyone and their mom have a side hustle. So even salaried people have side hustles, and they actually borrow to really pump money and start their side hustles, buy inventory, maintain business expenses, etc. So that just shows that, you know, a lot of Kenyans are thinking about different ways or alternative sources of income.
Is that a sustainable sort of model for people who have side hustles? Because that's a big thing in Kenya as well. Is it sustainable to do that, to borrow from the digital lending apps to sustain your business, and then, you know, kind of incorporate that in terms of, you know, the whole financial literacy, budgeting, saving, income, expenses, etc.?
Yeah, so if you, let's take the example of someone who probably has a job in a, you know, in a county office. Then you can imagine with their salary, a lot of the salary is, you know, how do I pay for my bills in the house, want to pay for school fees, you know, buy food, etc. So a lot of their money is tight, and they don't really have money to start a business. And what is helpful is at the interest rates that we offer, someone can be able to actually come in, you know, take the money, start a business, and recoup that, be able to repay us, and still remain with some profit. So that's pretty much how it works. And if you think about it at a more scaled level, that's how the biggest businesses in the world are built.
Right.
Even if you were to look at the biggest factories, the biggest telcos, etc., a lot of that begins with credit, and where you pump credit to be able to, you know, make big purchases or do capital-intensive purchases, and then you're able to recoup the money and repay. Yeah.
So from also just from your research and your time in the business, in the sector, and also based on the fact that many people are scared about CRB and all this, so what would be your advice to a Kenyan who's watching and they're asking, okay, so how do I budget? How do I save? Like, what are some of the tips, you know, to be financially literate and to stay, well, I don't say out of debt, because again, sometimes you need debt to grow, but yeah, just to stay sane. Let's use that word. Yes.
Yeah, and you know, I like that you can see that distinction between, you know, completely saying don't take loans, because one thing that I usually say is loans are not bad. The issue is just understanding what we call healthy borrowing habits. Healthy borrowing habits is, you know, are you borrowing more than you can be able to repay? You know, are you repaying on time, etc. So there are different things that we talk about. At least from a Tala standpoint, I talked about it earlier, but I would just encourage everyone, look within your Tala app, look in the Land Center. We have a lot of resources. And I also mentioned that you can be able to register for a personal finance coach, which we offer for free. Because for us, we understand that if our consumers or our customers have financially healthy lives, then it's a good direct impact on our business. The other thing is follow us on social media. We do post a lot of content there, which is very interesting for a lender, but it's a lot of content around budgeting, saving, investing, etc. And we host webinars every now and then. I think we did one last month with Centonomy, where we take people through some of these different skills. But more generally, I think two things that I would mention is, number one, you know, have a good understanding of your income and your expenses. So what is it that you need to spend on in the entire month? Then does your income meet that need? Because from the start, you're able to budget and plan and understand, you know, where all your money is going, which is the most important thing. Most people don't know where their money is going, and it comes as a surprise.
But because people think, and I don't know what, you know, in terms of the research what we've seen, but I guess people see like it's a lot of work. It's a lot of work for me to sit down and say, okay, lunch, sandwich, 100 bob. Dinner, this, credit, this, fuel, this and this. It seems like a lot of work.
Yeah, because I think what you're talking about is from a reporting standpoint. I think of it as, you know, you have 50K or 20, let's say 50K coming in the month after tax. You know, your rent is 10K. You know, shopping, you usually spend maybe 5K. You know, you need fare. By now you have a sense of like, in a month, you know, I'll pay this much in a motor or bus. Then you think about, okay, for my fun times, you know, I want to put this back.
Shere.
So that when you're spending, it's less about today I bought a sweet for this amount, but more about, you know, for example, my fun times budget or my family budget should not go above this. So when I'm spending over 5K, then I know I'm overspending out of this bucket of money. So think of it as putting your money into buckets, and it kind of keeps you accountable so that you're not overspending in some areas. And if you are, then you're very aware of that. Then the other thing is, you know, in as many ways as you can, just pay yourself first. What paying yourself first means is put some money aside, put some money aside for rainy days. It's very hard, especially, you know, when incomes are tight and things are getting more expensive. But you'd be shocked at, you know, even if you're putting aside 2K a month, by the end of the year, you have 24K. In case of any emergency, you're not borrowing that 24K, or at least that 24K lessens the burden of how much you need to close your emergency, you know, your emergency gap with. Yeah.
So to get it clear, paying yourself first is not it's not kupigia mwili pole. Like, I deserve this, let's go out and pick a shere. It's saving.
Yeah.
And also talking about that, what do you think? What have you seen in terms of what is Kenyan saving culture? Are we saving, and are we not saving because times are tight? And I'm thinking to myself, like you said, that 2K, before the government did what it did with Unga, you're thinking that is something I can use at home. So what is the culture like?
I would say it's not so good right now. We definitely understand that there's a room for a lot more growth with regards to saving culture in Kenya, and we have seen these coming in as trends. But I think probably one way to always think about it is, saving does not mean you have to save a lot of money. I think that's the thing that a lot of people get caught up in. I know there's a time a lot of people are doing the 52-week challenge and something.
Yes.
I think the goal of such things is to show you that you don't need a lot of money to save. So even when I say 2K, it does not mean you're taking out the 2K immediately. It could be, you know, you're earning every day, you're a boda guy, but every day you're saving 50 bob. If you put 50 bob aside for 30 days, that is already 6K.
Oh, wow.
Is my math right? That's actually 600. Sorry.
Right.
Yeah, but like, so if you that's 600.
Even
that's
100 bob a day.
Yeah. Let's even say 100 bob. Yeah, exactly. So you can imagine if you're actively saving, you know, that money and putting it aside. That's how saving works. So saving is not about, you know, taking a lot of money and putting it aside at once. It's about, you know, haba na haba ujaza kibaba. Yes.
Right. Yeah. So for some people who are now involved, you know, SMEs, everybody, the question on the mind is, okay, so at what point do I make a decision now to jump on board and get into the digital lending apps? What would be your advice to them?
I'd say
SMEs and MSMEs.
Yeah, for sure. I'd say number one, really understand what your need is. Then find a lender who works for you. Because right now, I think I mentioned earlier, we have over 300 digital lenders in this market.
Right.
You have a lot of options. So take the time, do your research, understand who is already in the market today, who will be able to offer you the best deal or the best offer and the most flexibility that you need. Then off of that, then you can be able to actually make your choice. But I would say the key thing to take out of this is, you know, do your own research. Then once you're in, I think be very keen on maintaining a strong relationship with your lender. As I was explaining earlier around how we you know, do our credit scoring, we use something called risk-based pricing. What is fascinating? Risk-based pricing.
Risk-based pricing, okay.
What is fascinating about that is the more you borrow and the more you repay on time, the lesser interest you pay. So it's because we use machine learning models. And that's a very fascinating thing, because for a lot of lenders in the market, they give you a fixed rate. It doesn't matter whether you repay on time or the guy who never repays on time, or the type of relationship you have, it doesn't change anything. For us, there's some people who pay as low as 4 and 5%, you know, at Stella. But, you know, we find our average interest rate being about 15%. So it's just very dependent on the relationship you build, and it actually enables you to consistently get a better offer. Yeah.
And then also, someone is asking on Twitter, what are the worst reasons to take a loan? Because it could be Friday, and I'm like, hey, nimepigiwa simu. It happens, and you just want to happen, as they say, nataka ku happen leo. So what are some of in your experience and based on the report, what are some of the reasons that people are taking some of these loans? You said luckily there are people who are doing it to get into business, but that's not always the story, especially those who end up not paying and changing SIM cards and doing all of that stuff. What are some of the worst reasons you've encountered?
That's a tricky question. I think, well, I'm not sure I'll be able to list things, because I do think people have different needs. However, one that is core, and I know especially at the inception of digital lending, let's say 2015, 2016, it was not even a problem with just AnnStella. Like across the board, it was something that was being seen, was people borrowing for betting reasons. And I think that becomes, what I'd call like an unhealthy borrowing behavior, because, you putting money somewhere where you're not really sure
there's a return.
There's a return, and the very, very low odds of any type of return. So probably that, that for us is something we highly, discourage among our users, because it is a signal of an unhealthy borrowing behavior. But apart from that, I do think people have different needs and different emergencies. And sometimes even with borrowing, it's more probably your money is held somewhere. You just need something to cushion an income gap before your money comes, which I wouldn't consider to be, a bad reason to borrow.
One of the things you mentioned as well is we talked about access to credit. We've talked about that, which is a big problem. The other thing is, of course, some of the rates in terms of interest that are there in the market. And so is there a way, because if you look at other countries, let's say first world countries, some of the interest rates are low. Is there a way that, this can happen to Kenya so that more people get access? Because we're talking about the Mamboga. Is there a way that some of these things, whether it is regulation or, what the 300 lenders, like you said, can come and talk about and do something about it? Is there a way that can be brought down so that it's more accessible and some of the rates are more manageable?
Yeah, I do think from a policy standpoint, it's very hard.
Okay.
Because if you think about it, the loans that are being offered are unsecured. If you go to, for example, a bank today, what they'll ask you is, if you don't pay, you leave me the deed.
Yeah, like some sort of security.
some type of security, right? But if it's a pure trust game, then of course the company needs to hedge the risk a bit more. But the other thing that I'll just repeat is, find a lender that is thinking about how to lower your cost to credit. Okay. So the example I talked about earlier for risk-based pricing, that's a very interesting thing, because a company is telling you, hey, I'm not going to ask you for guarantors, security, collateral, anything, but I just want you to show me that I can trust you. Then the more you show that the more you build that trust, the lower the interest you're paying. And it moves to the lowest in the market at this point. So that becomes core, and we do know that a couple of lenders use the risk-based pricing model. Yep.
And some of the one other thing, again, is, and it might be tricky territory, is if some of these issues with digital lenders and everything, there are already opportunities where you can use somebody's mobile money statements. Is there partnerships that are being explored with maybe banks or other institutions to make sure that some of this, information like, hey, you guys, we are doing this, you guys can do this too. It's credible, it's working, they're paying all this. Is there an exploring of some sort of partnerships of some kind?
Yeah, so you're talking about partnerships with banks, between banks and lenders?
Yes.
Yeah, well, we have seen, actually think about it, I'm sure in KCB M-Pesa are the biggest examples. I'm sure it's born out of a partnership between the M-Pesa team and NCBA. KCB M-Pesa is KCB and M-Pesa. And those are some good examples of coming together. We also have very close relationships with multiple banks in Kenya, because for us it's more around, just democratizing access, because a lot of banks were unable to reach let me call it the middle class, population and lower middle class populations, just by virtue of how they're structured, and also because they didn't have the technical capabilities to do that. And that's the beauty of fintech, because for us, we came in and said, hey, guys, we're coming in with the technology. We're using, machine learning algorithms, and we can show you how to use alternative sources of data to be able to underwrite and give credit to these people, because they are just as trustworthy. It's just that, how the system was structured before had left them out. And these were millions of Kenyans. So the story is, how do we bring these millions of Kenyans into the formal financial economy? Yep.
Take a look at the future, and I know with the digital apps and the digital space, I don't know if you can use 5 years as things might change too fast. So just generally, what do you think is the future of digital lending apps, and also the future of MSMEs? Just of course in light of all these things we're seeing, or even just the status right now with the regulation, people worried about collateral when central bank takes over, etc. What do you see as the future?
Yeah, let me, because you mentioned the regulation piece, I'll talk about that. I do think now we're moving into what I'd call like a phase 2 of the industry, which is going to have, consumer safety as the core. We have all had the horror stories of people's family and friends being called, etc. So, we're moving into a new realm where regulation has caught up with the industry. And, as talent under the Digital Lenders Association, DLAC, we're actually at the forefront of helping to bring this regulation up, because number one, it makes sure that Kenyans are safe as they're using digital lending apps. In
terms of their data as well?
Yes, exactly. There's also the new Data Protection Act, which everyone will be required to, abide by. Then number two, it sets us up on the world stage again, similar to what M-Pesa did back in the day, to continuously show people this is how, an industry can be regulated while not stifling how the industry is operating or stifling access to credit. So for us, we're very excited about it, and we're actually, in the process of our licensure as we speak. But one thing that I would say, and you mentioned it, it's not going to change anything for consumers. This is just more about advancing a safe operating environment for you. So you shouldn't expect to get on the Tala app and now we're asking for collateral security. That would not be something that happens. Yeah, so, and more generally in terms of future, I do think, digital lenders will be forced to evolve more and more to build for consumers. Earlier this year, we launched a product called Jichagulie Due Date, which is just around choose your own due date, choose your interest. And what we're moving towards is giving consumers more choice and control. So when you get on the Tala app, you're the one who's deciding the type of loan you want, the type of, interest you want, the type of, due date you want, etc. And that's what a lot of people will be forced to do. Because it's now, we're moving to a place where consumer is key, consumer is at the center, so that remains key.
Last question, right before, and we're going into some more influence, Trevor is going to come in. What happens in terms of everybody when it comes to elections? There's election jitters for SMEs, for everybody. What is the situation? What would normally see during election periods?
Yeah, well, we've only been, in market for about 8 years, so we've only experienced one. But I would say we definitely see a lot of uncertainty, and that is not just, for under consumers, as a business as well, because it's a period where everyone is really thinking through what happens next. Of course, we don't know what will happen this time around, and of course, we're hoping for the best. We do see increased borrowing in some senses. I think this time around it's because we're also sort of in an economic downturn more generally, and people just need more money to be able to meet the rising cost of goods. So I would say probably that is as a result of maybe the more of the economic pressures, and less about the elections. But that is a trend that we are seeing right now.
All right.
Yep.
All right, well, it's 9 o'clock. Mr. Trevor Mbija is ready for the next set, but I'd like to say thank you so much to AnnStella for coming through. Listen, folks, we hope you've picked something. Don't just borrow for borrowing's sake. Make sure, like she said, when you are taking the loan, you think about, most importantly, am I able to pay this back. Yes, you have an emergency. Yes, people do have emergencies, but are you able to pay it back? Don't just borrow for borrowing's sake. Then also acquaint yourself with some of the regulations that are out there so that you know exactly what you're getting yourself into, and that way tutasaidiana na itakuwa, as Shatta would say, itakuwa ital. Yeah, tumeambiwa not to discriminate against dreadlocks in Trevor's previous interview. So we are happy that citizens are equal employer. All right, anyway, thank you so much. We want to end it there. Remember, successful people look like you. And most importantly, God loves you, and that will never change. Tuonane.